What's good? You're locked into Money Talks TV. This is the Daily 8, your full recap of what really happened yesterday. Markets bounced, but don't get gassed. Layoffs, lawsuits, and big moves underneath that green. Let's work. Alright, so the markets decided to take the stairs up today. S&P 500 up 1.67%, NASDAQ up a solid 2.5%, and even the Dow decided to join the party, closing up 1.07%. Now I know what you're thinking. Is this the start of the bull run? Should I be throwing all my money in right now? Hold your horses, folks. Remember, the market is a fickle beast. This little rally? Yeah, it was fueled by some whispers about potential progress in the US-China trade talks. But as soon as those whispers died down, so did the market's enthusiasm. Don't get it twisted. A green day is a green day, but let's see if this momentum lasts before we start popping champagne. Remember, slow and steady wins the race. Speaking of cutting back, Intel dropped a bomb on the tech world. They're planning to cut a whopping 20% of their workforce. Now the CEO, he's trying to spin it as cutting red tape. You know, making the company more efficient. But let's be real, folks, that's a whole lot of people losing their jobs. The rumor mill says Intel's trying to shift their focus back to engineering, which, hey, I get it, innovation is key. But this is a steep price to pay. We're talking thousands of families impacted. This is a stark reminder that even the biggest companies can make drastic moves. Keep your emergency funds topped up and your resumes polished, folks. You never know when the tides might turn. And speaking of tough situations, the retail giants are starting to feel the heat from those tariffs. Walmart, Target, Home Depot, they all got together and sent a letter to the man himself, President Trump. Their message? Those 145% tariffs on Chinese goods? Yeah, those are gonna lead to empty shelves and sky-high prices. They basically said, look bruh, if you want people to be furious about holiday shopping this year, keep doing what you're doing. This is a big deal, folks. These retailers, they're on the front lines. They see how consumers are spending their money. And right now, they're sending a clear warning. Those tariffs are hurting, not helping. Chapter 4, Boeing, Tesla, and EV breakdown. And it's not just retail feeling the pressure. Boeing, the airplane giant, is saying they might have to halt production of their jets bound for China. Why? You guessed it, tariffs. Plus, they've got a bunch of planes that China returned that they can't sell anywhere else. Meanwhile, over in the electric vehicle world, Tesla's feeling the heat too. Their sales in Europe dropped a massive 28% compared to last year. They're now holding on to a measly 2% market share in the region. Now, don't get me wrong, the demand for electric vehicles is definitely there. But Tesla's facing some serious competition from European car makers. Add in the global economic slowdown, and it's a recipe for a tough quarter. Chapter 5, AI moves, office crackdowns. But hey, it's not all doom and gloom. The AI world is buzzing with activity. Adobe just dropped their Firefly AI on both iOS and Android. This thing is wild. It lets you create images using just text prompts. It's like magic, but with algorithms. On the flip side, Google's cracking down on their remote workers. They're basically saying, get back to the office, or risk losing your job. Looks like the era of working from your couch in your pajamas might be coming to an end. And finally, in the be careful what you wish for department, Chinese AI firm DeepSeek got caught red-handed transferring user data without consent in South Korea. They got booted off app stores faster than you can say privacy violation. This whole AI thing, it's exciting, but it comes with a whole lot of ethical questions we need to answer. Alright, let's dive into some earnings, shall we? IBM missed their targets and had to suspend $100 million in federal contracts. Their shares took a 6% nosedive. Ouch. Comcast, on the other hand, lost 199,000 broadband subscribers. But hey, at least they beat revenue expectations. The airlines are hurting. Southwest and American Airlines both cut their guidance for 2025 and 2026. Higher labor costs and all that tariff uncertainty are making for some turbulent times in the airline industry. PepsiCo's revenue is down 1.8%. Looks like people are cutting back on their sugary drinks. And Procter & Gamble, the consumer goods giant, cut their full-year outlook. They said price hikes are likely. Translation, get ready to pay more for your shampoo and detergent. The one bright spot, Bristol-Myers Squibb. They beat earnings per share expectations and even raised their forecast for 2025. So yeah, it's a mixed bag out there. If it's not tariffs squeezing profits, it's weak consumer demand. Either way, this earnings season is giving investors a serious case of the jitters. And speaking of tariffs, things are heating up on that front. 12 U.S. states, led by New York, filed a lawsuit to block Trump's tariff powers, calling them unconstitutional. This is getting real, folks. Trump, meanwhile, is saying that trade talks with China are active. But Beijing's singing a different tune. They're basically saying, nah, we're good. The US is considering exempting auto parts from the tariffs. GM and Ford are probably doing cartwheels right now. And in a move that surprised absolutely no one, Indonesia is pledging to buy more US goods to avoid getting caught in the crossfire. We're talking agricultural products, energy, and tech. And get this, the European Union's pharmaceutical industry is threatening to raise drug prices if they don't get some help with the tariffs. They're blaming the trade war for their woes. This whole tariff thing, it's not just headlines anymore. It's triggering lawsuits, backdoor deals, and price hikes all over the world. All right, let's wrap things up with a quick look at what's happening around the world. Russia launched its deadliest missile strike on Kiev in 9 months. 8 people are dead, and critical infrastructure is in ruins. Tensions between India and Pakistan are flaring up again after militant attacks in Kashmir. Diplomatic relations are on thin ice. Norway's sovereign wealth fund, one of the biggest in the world, lost a staggering $40 billion in the first quarter of this year. They're blaming the tech stock sell-off and currency fluctuations. And back here in the US, Trump signed new executive orders that are shaking things up. He's wiping out funding for diversity, equity, and inclusion, DEI programs in education. He's also increasing foreign oversight of US colleges and pushing K-12 schools away from equity-based discipline policies. This is a big deal, folks. It's not just about economics anymore. Policy is shifting too, and it's happening fast. That's your full wrap for April 23rd. Green market on the surface, but layoffs, lawsuits, tariff tension, and global drama underneath. Stay sharp. This is Money Talks TV, where we follow the bag, not just the game.